So every American could get $5,000, a $5,000 check that could come to them, according to Elon Musk. So what's going on? Why did Elon Musk mention this, right? And it has to do with the whole DOGE kind of department and organization that they started, right? Trump and Elon. And Elon being head of DOGE, the whole idea of DOGE is to make the government agencies out there more efficient, to spend the money more efficiently, because according to a lot of the claims that they mentioned, that a lot of the American taxpayers' money have been going into wasteful projects or unknown projects or things that just don't really make sense. And Elon's been mentioning that all this has to stop immediately. There's going to be job cuts as well to save on the money. And third, there is a goal to save an X amount of money, which I'm going to talk about in a second. And if that goal is hit, then you can basically get the $5,000 back, the refund back to the American citizens, right? But what is that goal, right? And how will we track this? What more information can we get from this? That is still unclear. But the goal is $2 trillion. They have to hit $2 trillion in savings in order to then process the $5,000 check to all the households. But there's a little bit of an issue here, because the point is to save money, right? And you're giving back money now, $5,000 per household, which is basically, going the opposite direction of what DOGE was trying to start off with, right? Maybe not, right? I could be completely wrong, but it's just a little bit unclear from that point of view, that we could see, if the $2 trillion hits, you're going to give 5,000, which is just going to increase the deficit again, right? Where will that savings come from? Where will that money come from, right? So another thing is that we've heard about Musk talking about how he was very critical about the stimulus, how it increased prices and inflation. So if you're going to give out $5,000 to everybody out there, isn't that going to create the same inflation issue which we saw during COVID, right? Post-COVID, with all the stimulus checks that came out, with all the money that came out from the fiscal side, the monetary side, which basically all pumped into asset prices and caused the markets and real estate prices and goods and services to go up. So if you do that again, push out $5,000, that's quite a hefty amount for a lot of households. What do you think that's going to do, right? You're going to have an effect in the economy that when that first $5,000 check comes in, you're going to get people to go out and quickly spend it. Spend it on goods and services, spend it at the grocery store, spend it on maybe the stock market, real estate, whatever the case may be, right? And now we have new fresh money chasing the same amount of goods and services. That's just going to cause the prices to go up higher and higher. So again, this is just in talks. It's not necessarily true that it's going to happen. We don't know. We need more clarity around this, but it could be a possibility, especially if they do end up hitting their $2 trillion savings goal. Now, here's the other thing, the caveat, right? What if, let's say, you don't hit the savings goal, the $2 trillion? What if the economy tips into another recession? What if, the unemployment rate goes up? What if job losses happen, right? You're going to get money printing again, and you're most likely going to get fiscal stimulus. You're going to get, the government to issue more bonds, increase the deficit, increase the debt, and guess what? More money is eventually going to be going to households, creating that trickle effect that we saw before, where inflation, where the money comes to the household and then eventually chases all these goods and services, causing inflation to go up and asset prices to go up, right? So that is another scenario as well, if that, the $2 trillion savings goal doesn't happen. So no matter what path you take, whether they save money, whether you're in a crash, whether that doesn't happen, any stimulus money that goes out is going to eventually bring inflation higher, bring asset prices higher, which will then, continue to create the new playing field, the new level, the floor since COVID, right? That floor of higher prices. We probably live in this environment for a very long time, except for exception of AI and other things that could create deflation. But that's another topic, right? But all these stimulus, all these talks about money pumping and giving it to people back is just a recipe for higher prices at the end of the day. So that's just from the fiscal side of things. That's just from the government side of things. We had also the central bank come out with its minutes. And we had the Fed come out, say a couple of things, right? First things first comment is further progress on inflation. Many participants want to see further progress on inflation before making rate adjustments. So they're pausing here, they're not cutting that aggressively. We know that already. Economic growth described as expanding at a solid pace. The labor market conditions remain solid. Economy is fine. Job market is fine. Here's another one. Many participants said after the conclusion of the balance sheet runoff, it would be appropriate to structure asset purchase to move maturity composition closer to the outstanding stock of treasury debt. They also mentioned, which is not here, I'll go to the next point. Survey respondents saw the balance sheet runoff process concluding by mid-2025, slightly later than previously expected. Okay, those two lines right there. Okay, I first started off talking about what? I talked about this $2 trillion goal, this $5,000 check stimulus going to be causing all this inflation and pumping. Okay, that's just from the government side. Okay, we just had the central bank just tell us right now, that the survey respondents saw the balance sheet runoff, right? So they've been conducting QT, tightening the markets, not printing money, doing the opposite of that, and they see that ending by mid-2025. And then eventually it would be appropriate to think about asset purchases, QE, money printing, money go burr. So hold on a second here. $5,000 stimulus check from the government, and then eventually the central bank, the US Federal Reserve, coming out to stopping QT and by mid of this year, and then eventually start the money printing, start pumping money into the economy, right? Put those two and two together, the fiscal side, the monetary side. It's just you're going to get more liquidity, more money pumping into the economy with the current situation we are in right now, right? Especially if there's no recession and no crash. I'm not saying that that's out of the woods. It's still there. It can happen at any time. We don't know when. This year, next year, 10 years from now, who knows? But if we do get that, and we get the job market crumbling or the economy crumbling, you're definitely going to get a lot of money printing in that scenario. If we don't get that, then whatever the fiscal side of things, monetary side of things, if the economy is still fine, that means you're going to get some sort of stimulus, some sort of money printing, some sort of pumping into the system, causing prices to then continue higher from where we are right now. Right? Just think about that, for example. If you go to the grocery stores, you might see egg prices still elevated, grocery prices elevated, food outside elevated, shelter cost elevated. And then you're adding more money which, if you remember back during COVID time when they did that, prices just shot up. So this is a never-ending story here with inflation and prices, and especially with asset prices. We'll continue to see those go up higher, higher, and higher. Maybe we may have a little bit of a dip, 30% correction, 40%, depending if we get a recession and how severe it is and when it comes. But regardless, if you get it or you don't get it, the recession I'm talking about, you're getting the money printing either way. Good economy, bad economy, which equals one thing: prices go up in both scenarios. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.